Good evening, everybody. All right, hope everybody's wearing their favorite baseball outfits. Market analysis, as we can see, it's still as flat as a pancake. We're still in this wedge formation. And you can see more graphically. All right, and as you can see, even on a daily basis, we're back in the syndrome of being down, up, down, up, down, up, down. But we're getting to a point here. So we've got to see, again, whether this point is broken out either to the upside or the downside. And if they do move, they're probably to the upside coming right back up into the 50 or this trend channel. They break it to the downside, looking for a bearish J-hook about the same magnitude as this one. Means there'll still be a lot of good opportunities on the short side. And the NASDAQ, kind of the same scenario, just kind of in a wedge formation sideways. Yeah, the Dow Jones, this is what you call a wedge formation. So it's either going to break one way or the other. Yeah, same as a flag or a pennant formation. It could break to the positive just as much as it could break to the negative right now. So there's no way to tell until we wake up one morning and we find the pre-market futures are up 140 or down 140. Something's telling us which direction they've taken the market. All right, let's see. Some of the other influences, crude oil, still rolling over very slowly. It was either going to do a bobble, which meant it would support at the T-line and head back up through the 50, or if they're continuing this lower, good possibility they're going to bring it back down to the recent low, to a double bottom. And the grains did very well today. Wheat was up pretty strong after the strong signals down here. Let me make this a little bit bigger. Kind of a scoop pattern setup. Morningstar signal, doji sandwich, and then breakout to the upside. Same with soybeans. Soybeans had that big long-legged doji on Thursday or on Friday, and then closed higher today. Now they're trading a little bit higher right now. So I would suspect soybeans could at least come back up to the 50-day moving average. John, I think this is the wheat fund, WEAT. Looks pretty much like wheat. First target would be the 50-day moving average. And what else? Oh, I've been short lean hogs because it kind of failed here at the T-line. Notice the left-right combo and then confirmation back through the T-line. Suspect it's going to come back at least down to the 50. And was short cattle. Today, cattle came all the way up, tested the T-line, and drifted back off again. So if this opens lower, I would suspect we could be going all the way down into this level, which would essentially give you a wave 1, wave 2, wave 3. Corn came up strong. It's trading up a little bit after hours. Again, that little scoop type pattern. There's your Morningstar signal. There's your doji sandwich right behind it. You're going to have to tell which one that is, Rama, because we're running through so many charts. The dollar opened up a little bit higher right now, but you can see where they failed here at the 50, a blue ice failure, which means this could be selling off all the way back down to test this low. Rama, I don't know which one that was. And gold's trying to do a basing action in here. It needs to get back up, preferably above the 50 as well as the T-line, to break this downtrending channel. Lean hogs, no, that didn't. A bullish Harami on live cattle, maybe, but you got to remember we're stochastics. They're not in the oversold area, and you're in a downtrend. So until you see something that looks like a signal in the oversold condition, you just have to see what it's going to do the next day. Oh, Mario, I'll try to. We started shorting cattle yesterday or Friday because we were with an opening lower with a doji right here on the T line. If it opened lower and started trading down, what would you have essentially? You'd have essentially a bearish doji sandwich. Things like soybeans, we're buying on a positive open today because you've had this long-legged doji right on the T-line and opens positive, pretty much telling you that this was a reversal signal. Okay, and then somebody earlier today wanted to kind of review some of the positions we have open right now. So LXRX is one that we usually just stay long as it doesn't close below the T-line. Notice where it did today. It closed right back up at the top of the range after consolidating to the T-line. Stochastics are still heading up. And where do things usually break out? Kind of on a fry pan bottom basis. Usually when stochastics are in the overbought condition. So this one, it can still be bought on positive trading tomorrow, because that would kind of give you a doji sandwich breakout of this this resistance level. And if this day right here is the same as this day right here, I hate when that thing. We're basically going to be testing the recent highs. So that's one to keep an eye on to see if it opens positive tomorrow. Another one was LPCN, which did come back down to the T-line, but notice where it closed, right smack dab on the T-line. Now, that is important because you've got to remember nobody has the T-line on their charts except us. And the fact that it closed right on the T-line kind of gives you an indication that things should be moving. This one, if it opens higher, you stay in it. If it opens lower, it pretty much tells you they weren't supporting on the T-line, close out the position, and then you could always buy back if it came back up through the T-line. Hold on to your individual charts until we get to the end, and when I tell Jim to do the double line, that's when we'll do each one. Yeah, the green line is a 3 exponential moving average. Okay, some of the biggies. Amazon, pretty much flat at this point, but you have to go on the same criteria as most of them, but as long as it stays above the T-line, you want to stay long. However, it looked like it failed. You could probably draw its trend line somewhere right down through the tops. Came right to that resistance level and failed today. So Amazon also has the same criteria. You need to see this open positive and trade positive tomorrow to want to stay in this one. Apple opened higher today and faded, but notice what it did. It kind of gapped up through this little resistance level. In this resistance level area, you watch, especially with the gap up today, you watch to see when the profit taking of today is over and see if they can start pushing it back up to the 50. So right now, if you were playing Apple, you'd still be on the long side, but you pretty much want to see that they open up positive tomorrow. Netflix, there's nothing here other than to stay short. And why is this such a strong chart to the short side? because notice what happened up here. Kind of an island reversal with your doji gap down through the T-line. Pretty much tells you they want to get out of this one in a hurry. Basically, all you can do right here is stay short until you see a until you see a buy signal. Can you discuss a bit how to handle a situation where you have a signal and then a few days later another signal that seems to cancel that? Does the signal lose its validity after a certain number of days? John, basically what it boils down to is you stay long until you see a candlestick sell signal and close back below the T-line. Can you still short Netflix from here? I would think so. If it opened lower, you still have the potential of it going down to the 200-day moving average because essentially you've got a slow curve. So I'm trying to still answer John's question. A certain number of days, yeah, just maybe 2 or 3 days. And remember, if they take it up and then they can turn around and bring it back down below the T-line, then you want to it better open positive the next day and trade positive if it opens lower. And that's still going to be a function of if you wake up and you see that the market is going to open lower because the pre-market futures are down and the stock that you wanted to see open higher and trade higher is opening lower, yeah, just close out the position. The worst case scenario is that it turns around and heads back up. You can always buy it back. So that means, and this was one of my major mental problems, I hated to sell a stock and then it turn around and head back up and have to buy it back higher. Because before candlesticks came along, I always felt they were out to get me. So if I sold a stock because it looked weak and then turned around and head back up, I'd think, they fooled me. They got my stock. And well, now I can see that graphically. If it's turned around and headed back up above the T-line, I'll buy back. There's no problem closing out a position when it looks like it's time to sell and buying it back when it looks like that it's still time to be in that long. Gap up, do we only consider their bodies? Only do we include their wicks as well? On a true gap up or a gap down, you want to see that that's a gap. You can see where it had a low right here and then he opened it down here. But if you have a doji and it opens lower and starts trading down, it's the same thing. It's just more forceful when you see the gap. How to handle initial stops in the market. Okay, yeah. Even using 10-minute chart to enter position. Okay, not working on many stocks now to protect yourself. You find what seems to be a good time to enter, and before you know the price is down significantly in a few hours. Yes. Let's say, for example, and I'm just picking out an example. Let's say here's our doji. The only thing is it's not in the oversold area. But if I saw a doji and I bought because it gapped up looking like it was reversing, when it came back down through the doji, that tells me they're going in the wrong direction. I shouldn't have gotten in, close out the position. Let's see, the resistance appears to be at the 95 level. Makes sense to see if it supports at that level. The support is right in here right now, but this is a slow curve. Remember, a slow curve is one of the power patterns. So if it opened lower tomorrow, you definitely want to be short, because if they start coming down through this level, that tells me wave 1, wave 2, bearish J-hook, wave 3 should take me down to the 200-day moving average. You mentioned no one else used a T-line. How did you come up with this? What made you use a T-line? Jazz, one of my first private training students that I had, which was Rick Sadler, who now runs the Hit or Miss candlestick website. He trades a lot differently. He trades by scalping using the candlestick signals. So he came down from Anchorage, Alaska. Oh, this was probably way back in the early, I don't know when it was, or around 2000, 2001, somewhere in that time frame. Came down, we spent the private training session two and a half days in front of the screen. And yeah, see, there are people in Alaska. And so he went back and we would keep in touch with each other. And he said, I'm still having problems. I need to have this clarified, that clarified, which I usually do on a follow-up. And then he called back one time and said, take a look at the 8 exponential moving average. Said, I've been testing it. And the nice thing about candlesticks is, and as you can see, the charts aren't very messy. They're fairly simple. We've got the stochastics and we got the moving averages. And I would usually play off the 50 and the 200 and the 20. And he said, look at the 8 exponential. And this is, again, the nice thing about candlesticks. If you want to try something new to see if it improves the probabilities, you can add it to the chart. And if it doesn't work, you take it back off. But at least we know the candlestick signals work. We're just trying to add confirmation or indicators that make them work better. I'll get to Google here in a few minutes, Jim. So that's how the T-line came up. And this is the whole reason we have the chat room, is if you come up with an indicator that seems to be improving the probabilities, people put it out there, and so other people can test it and then even tweak it. So instead of everybody trying to reinvent the wheel themselves, that's what the chat room is for. It's where everybody can accumulate their knowledge and add it to other people's observations. Oh, I forget. So that's how the T-line came about. I used to make good money trading candlesticks without the T-line. When the T-line started, Rick showed it to me and I tested it for a while. I make very, very good money now using the T-line. It keeps me from being whipsawed in and out of positions. Scalping, yeah, it's an old Indian trick. Scalping is where you just take very quick profits. You see a price start moving, whether it's up or down, and you get in and you get out right away, even faster than kind of day trading. Okay, what else was I looking at here? Baidu. Baidu, as you can see, has not been able to get back up above the T-line. This one you can be short. Where's the expected target? Well, if you're having a failure, it could bring it back down to test the low, which would be a good percent move to the downside. eBay. Another one that failed at the 50. Kind of a blue ice failure, meaning they're probably bringing it down to the 200. And Goog, all you can do with this one is stay long as it stays above the T-line. Okay, some of the ones, well, that's what we were working on. Win is another big one that we're short, because every time this is where you kind of observe the obvious. The obvious is after this evening star signal, failure of the 50, they've been in a downtrend and they've never been able to close it above the T-line. And people say, well, shouldn't you be worried about being short with your stochastics in the oversold area? Remember, we're not trading stochastics. We're trading the chart pattern. The stochastics just tell us where we are in that trend. So it's been oversold for a month, but there's been no buy signal or anything that told us that there's been a change of investor sentiment. So all you can do at that point is stay short until you see a buy signal and a close back up above the T line. That was Win. All right. HLIT was one that we were getting ready to buy. And this is why you want to have bullish confirmation the next day. Now, here's a case also where if you bought because it was trading positive that day after our kicker type signal, it was trading above the T line and it closed back on the T line, today, what should we have seen to stay long? We should have seen it open positive and trade positive. The fact that they started trading it back below the 50 told us the 50 was probably going to act as resistance. Even though we've got a very strong buy signal on the kicker signal, this is telling us they aren't buying real strong yet. Close out the position. Now what's the next thing we look for? We look for the bobble to see if they come back and support on the T line. And if they do, get ready to buy it when it comes back up through the 50. Would I enter Win now as a short? No. Because it's in the, right now, it's in the oversold area. This was the place to be shorting it when there was more rationale for shorting, a left-right combo, then followed by a gap down. That was our short position. We'll get to some more shorts here in a while that would be better situations. GMCR, Keurig, has been acting well, but I closed out the calls on Friday only because it was getting too close to expiration. These were the September calls. That it could possibly, on any weakness after the doji, come back and test the T-line. Doesn't mean it was a sell as far as the stock, but as far as trading the options, it told you they're going to bring it back for a few days. That's going to cut into a lot of your time going into expiration. It was better to take profits here, and then over the next couple of days, if it kept heading higher, especially up through the 50, you could always come back and buy the October calls, telling you there's going to be more upside. So I'm out of the calls on Keurig. I'm still long the stock. Right now, I'd watch to see if a J-hook type pattern, or at least supporting on the T-line, is in progress, because if it keeps coming up, then I'll flip the option money over into the October calls. The stochastic settings are all the same. They're 1233, and I use them on my 1 minute. They're on all the charts. The charts are what you call fractal, which means all the settings are exactly the same, whether you're trading a 1 minute chart, an hourly chart, or a weekly chart. When you trade options, do you generally go short term, such as within? Yeah, usually I don't want to be out too far, or I'm usually trading the closest expiration as long as it's not too close. So right now, if I was buying calls, I wouldn't be buying any calls for September, which the September options expire this Friday. I'd be buying the Octobers. Now, if I'm doing spreads, I'm buying the spreads when they're within 2 or 3 weeks of expiration. And if I see something real dynamic in the final week, I'm more likely to do a credit spread. Not very high profit, but the probabilities are extremely strong. So it just adds a little bit of income to the account. So trading the options have different parameters or time frames based upon what type of trade you're going to do. If I was buying calls outright, they'd be October. I've been buying some spreads here just recently because the closer you are to expiration, the more more pronounced your options are going to be from one strike price to the next, because there's not going to be any premium built into them anymore. Do you cut back on placing stock trades with the FOMC meeting this week? No. Now remember, candlesticks are the accumulative knowledge of everybody buying and selling during a particular time frame. So that's already built in. People are buying and selling based upon their knowledge of the FOMC meetings coming up this week. I'm buying or selling based upon what each individual's chart is telling me. Let's see. Oh, ARI. We can pretty much see this. This is a big fry pan bottom. And so we have one very simple rule. Even though it sold off today, notice it was not a sell signal. And number one, and number two, it didn't close below the T line, let alone the 50. So very simple. You just stay long on a fry pan bottom until you see a sell signal and a close back below the T line. How do you treat volatility in your option trading? Larry, I don't even pay attention to it. I'm looking more, the more volatile a price move is, the better off we are for trading, because we've got a visual chart to tell us which way that trading is supposed to move based upon the signals or the patterns. Can you go over those strike and expiration choices for options? Mario, on an option, I'm usually trading the closest expiration date that I'm trading. Now, some people trade the weeklies. I don't have time to trade the weeklies just because I got too many things going on. And that's also another integral part of your trading. You got to trade the time frame that you are most comfortable with. Obviously, if you're at work all day and you can only get to maybe your charts once or twice a day, that you shouldn't be day trading. You're probably more apt to be swing trading. If you can't get to the charts once a week, then more than likely you want to be a longer term trader. Or if you're sitting in front of the screen all day long, you probably want to be a day trader. So it's so when I'm trading options, I'm usually trading the closest expiration date, which in this case, instead of doing the Septembers, which are too close right now, they'll expire this week. If I'm buying options outright, I'm going to be buying the Octobers. I won't be doing spreads right now because we're too close to expiration, and I won't be doing spreads for October because we're too far away from expiration. I want to be within 2 or 3 weeks of expiration to start doing the spreads, because your profitability on a spread doesn't become amplified until you get right close to expiration. Earnings don't bother me. Remember, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. And so if they're buying, knowing there's an earnings report this afternoon or tomorrow afternoon, that means probably somebody a lot smarter than us, or me anyways, is buying even though the earnings are coming up. So I'll be buying based upon what the chart is telling me to do. The T-line crunch is this little, notice how the T-line keeps crunching the price up into the resistance level, which it closed right there at that resistance level today. And so observe what it was doing. They really couldn't close this, especially for the last week, below the T-line. They brought it back down to the T-line. They opened to the T-line, but they couldn't close it below the T-line. So that's telling me they're crunching, the T-line's crunching the price up through this resistance level, which makes Tesla a good buy if they open this positive tomorrow, because that's pretty much going to be telling you that they crunched right up through the resistance, and that resistance not only is the 50, but you can see there you can draw a line right down through the tops. So if it breaks through there, everybody and their brother is going to see that they took it through. You want to be buying early, because once everybody sees that it's above the 50, all the people that were watching the 50-day moving average are going to start jumping in. Do you trade weekly spreads or directional calls or puts? Oh, I don't know what you mean by directional calls or puts. Yes, I will buy calls or puts. I just don't have time to do the weeklies because I've usually got too much stuff going on. So I'm usually just a swing trader that if I'm going to buy calls or puts, I'm going to just trade the monthly and base my decision on where do I think that price could move before expiration. With 4 being elevated, are you buying or selling spreads? I don't know what that means, Jamie. Would the T-line crunch be like a rising? No, it could be, but I'm looking at more that they just can't close below the T-line, and they're still pushing it up toward that resistance level. Okay, let me do a few more charts here. Some of the ones that we were working with. Kara, same scenario. We got a fry pan bottom and no, not a sell signal. You just stay long as it stays above the T line. The stochastics are 12.33, and that's nothing set in stone. It's just that through the years, and it wasn't through the years, it was probably one evening, I sat down and said, all right, 14.55, which was the standard, was a little bit too slow. So I kind of tweaked through it. I did 14.51, 14.3, 4, all sorts of things. 12.55. I finally came up with 12.33, which pretty much corresponded with the low of the stochastics being at the low of the chart, or the high of the stochastics were at the high of the chart. So that's nothing set in stone. They just have been they've worked well for me for the last, I can't imagine, 35 years now. How about Forex? Any time frame is, yeah, any time frame, Phil, remember, it's just the cumulative knowledge of everybody buying and selling during a particular time frame. The only problem with Forex is you don't have a daily chart to work off of because it's a continuous trading. So you pick out a time frame that you'd like to trade, whether it's off the 10-minute chart or the 30-minute chart or the hourly chart. You just find something that corresponds with the amount of trades that you'd like to do. All right. Okay, here we go, Lori. Yep, we'll crank away. Let's see. Oh, here's one where somebody was asking today, might be setting my stops too close. Sometimes that happens. So today, I closed out SGY this morning because it closed below or was trading down, and it looks like it was heading down after closing right on the T-line. However, as you can see, by the end of the day, it closed back up above the T-line. So it doesn't bother me at all to close out a position down here and the next day buy it back here, because I always illustrate the point that if any chart, for example, was a 10-point move and I only get 8 points of it, I know when I got those 8 points, the probabilities were pretty strong I was going to make money. May not have made the whole 10 points, but remember, the compounding effect of being correct a high percentage of the time is much, much stronger than trying to hit a full move. Slow stochastics, yes. Is that a belt hold on CYG? No. No, belt hold, we'll get to a belt hold. I'll point it out when we see one. ACI, did I say that right? Failed at the 200. Now you've got a little Morningstar signal closed on the T line. So you've got a buy signal. Stochastics getting close to the oversold area. Makes it very simple. If it opens positive, it should be moving up, back up to the 200. So this is a case, too, where if it opens positive and starts trading positive, I just put my stop somewhere back below the T-line, because if it's going positive like it shouldn't come back in this direction. If it does, it means I want to be back out of it and wait for the next buy signal. Okay, let's see. And So here's another case too. This is why you want to know what should happen after a signal. Notice what was happening on our wind trade. That if you didn't close it out right here, that it needed to support on the T-line and do kind of a J-hook pattern like it did back down here. Except today when it opened lower and basically traded back below the low of the doji of Friday, it was telling us they weren't staying up above the T-line. It was time to close this out, which we did. Also, notice what your stochastics were doing. They were starting to head down. So this was the time to close it out, because if this was going to do a J-hook, where should it have closed, or where should it have opened after a doji? Remember our simple rule of a doji, it's going to move in the direction of how they open it after a doji. So the fact that they opened it lower and started trading it down told us right away they weren't opening higher, obviously. So it was time to close out that position. What was the worst case scenario? You closed it out, came down and came back up, did a hammer type signal. You could always buy it back on positive trading. Back in the good old days before candlesticks came along, and me being the worst investor in the world, I would have held on to this thinking, oh, I don't want to take profits because what if it's still in an uptrend and they turn it right around? And I would hold it, and down here I'd say, why the heck didn't I close it out up here? At least now I have a playing field to say, all right, this is where I close it out, and if it turns around and heads back up, I can always buy it back. But it keeps me from holding on like I used to all the way back down to where I bought it or below where I bought it, and then come back and say, why the heck didn't I trade or close it out up here? At least now I can see where the signals are telling me that there's been a change of investor sentiment. A belt hold was SPWH. Yes, this is a belt hold. Belt hold is where they gap it way down below any of the trading range. And it's significant. You can tell there was a big gap down out of the range. And then you bring it back up into the range. Now, that's different than a reversal signal or a signal itself, where we have either a piercing signal or a bullish engulfing signal. All it has to do is come back up into the range. And what's this basically telling you? Told you that they opened it much way down here, lots of sellers, and then the bulls took out all the selling. So at that point, you can see the bulls are back in control, and they took out a lot of the sellers. There's usually no sellers left in front of them or less to make the next move up pretty strong. Do you wait to close at the end of the day? No. Remember, on win, what's our rule of a doji? They're going to move it in the direction of how they open it after a doji. So here we had a doji practically right on the T-line. And when they opened it lower, that told us they weren't opening it higher and taking it higher. But more than likely, they're taking it down because they opened it lower. So if you close it out right here, which we did, what was the worst case scenario? That it turned around and started back up. You could always buy it back. But at that point, the probabilities told us they were taking it lower because they opened it lower after the doji. Remember, the other indicators are just confirming indicators. Your first criteria for making a decision is based upon what is the signals telling you, or what are the signals telling you. Okay. Did you consider closing it out at the red-handed above the 3T? This is where you should have closed it out. You had kind of a hanging man failure at the 200. It opened lower. Where do you think it was going back to? Back to the T-line. What's the worst case scenario? If the T-line held up and did a bobble or a J-hook, you could always buy it back. But when we saw it open lower, instead of opening positive and staying above the 200, we knew where our next target likely was, back to the T-line. Was it going to hold there? We didn't know until it got back here. If you were still long because you were holding at the T-line, today it should have told you the doji right here in the T-line. If this was a J-hook pattern, it should have opened positive and started trading positive. The fact that they opened it lower told us this downtrend was still in progress. Okay, that was, we forget which one we did, ACI? ACI closed on a bullish pattern right on the T-line. If it opens positive tomorrow, you want to be a buyer. We did that one, didn't we? Okay, here's a few others on the long side. Soda, for example, here's a case somebody was asking, and I get in, and then all of a sudden it turns on me. Yes, that's going to happen. So you had two criteria here. Either you closed it out, and then tomorrow if it opens positive and starts trading positive, you can see that the T-line is going to act as support. You can always buy it back. But this was a strong little signal right here telling you had a doji hammer gap up, and you're seeing this kind of slow curve. So if you close this out after buying up here, that's the other major factor that I had to get accustomed to, is that you got to always realize that every trade that you put on is not going to work. Right, 33% of them won't work. So if I see something that's not working, I close it out, because I know if I take that money tomorrow, I can find something where the probabilities are 60% in my favor. They are going to work. Is 10,000 volume on an $85 stock too light? Yes. I usually want to see about 200,000 shares traded each day. My minimum price is $5. So will 180,000 on a $30 stock be all right? Yes. The reason you want volume, not so much for liquidity, but for information. Because if you only got 10,000 shares traded, that's not really telling you what the investor sentiment is, because somebody that's out there in an uptrend decides they have to sell because they are going to go buy a condo in Miami. They're not selling because investor sentiment's changed. They've just sold because they needed the money. So on that light of volume, you don't see what the total sentiment is at any one time. Another one, XNPT. This one didn't execute. It needed to get up through the 200 today, and it failed there. So this one didn't execute. That's why you always want to make sure that your signals are confirming. I would have closed it at the end of the day, seeing that it wasn't going to get back up above the T-line. Because it did two things. Number one, it closed below the T-line. If I had owned it, in this case, I probably wouldn't have owned it unless it had opened positive today, because that would be confirming that little Morningstar signal. The fact that it opened lower told me I need to wait until it comes up positive, and it never did. If I owned it in here for some reason, and it closed below the T-line like it did, what's it telling you about the trend? Basically telling you the trend is this way. It's not, hasn't curled back up. Okay, AST. AST did kind of a doji sandwich today. You can see the big rounding bottom. You can see how what it pulled back was fairly indecisive. This pretty much tells you that they're taking this one up. Again, notice where they moved it from, right off the 50-day moving average and the T-line. So anytime you kind of see that doji sandwich, expect more upside. This one will probably be on the recommended list tomorrow. TRVN. There was your message. There was your big best friend signal. Doji gap up. There was your profit taking. And where did they profit take it to? Notice how decisive this was in selling. Very indecisive. And then when they got back to the T-line, what they have? A doji followed by a move up. So this is your J-hook pattern. If this opens positive tomorrow, you want to be buying, because this moved from 6 to 12. Look for it to move from 12 to 16 very quickly. And BLCM, notice what it couldn't do at the T-line. Couldn't close below the T-line. This is kind of your one-day bobble. So they opened it, brought it all the way back down, and then took it right back up again above the 50. I'd be, notice you kind of had a Morningstar signal here. I'd be ready to buy this one on positive trading tomorrow. Let me see, whose handwriting is this? Chico's. There's your best friend again. You watch to see what this does tomorrow. If they start trading this positive, you want to be a buyer because that essentially tells you you're going to be in the, oh, I didn't want to do that. I do this. I didn't want to do that. You're probably going to be in a 45 degree from here. So you should probably I probably should have people pay attention to the 45 degree a lot more because the probabilities of this being in a steady uptrend from here is probably extremely good. And so whether you're buying the stock or the options, these are very good trade setups, and you know what shouldn't happen. If this is where they opened it and started trading positive, they shouldn't close it back below this level right now, and they shouldn't trade back below this level. So if there's some profit taking, you want to get out of it if it comes back to those levels. Then you watch for when the profit taking's over and it starts back up. But if it opens positive, it means the profit taking of today from here back to here is over. They're going to be in a 45 degree. Somebody was asking about FMI today. And notice the slow curve and the close right on the 50. Makes this very simple. If they open this positive, the first target is filling the gap because of that slow curve. Remember, the slow curve is like a slingshot effect coming out. When you see the probability of a 45 degree, how do you anticipate the price move going forward for a given time frame? I don't understand the question. How do you anticipate the price move going? Usually in a 45 degree or some sort of steady uptrend. You could have bought today if you were following the stock, but there was nothing up until this point to tell us there's any reason to buy. Now, if I saw it trading up here during the day because I was following the stock, yeah, I would have been buying. But since I wasn't following this one, it wouldn't have come up on my scans until tonight, showing me a big percent price move, and then I can see visually that it's a wave 1, wave 2, going into wave 3, and if they open up positive, I can see where the next target is, so at least I know where my target would be. ADXS, I know a lot of people have been following this one. This had a doji sandwich. Big day, doji, made it very simple. If it opened positive, we're going to have a big day, somewhat the same magnitude as this day. And it was telling me the 50-day moving average wasn't the 50-day moving average wasn't going to act as a resistance. You can see that there's a trend line coming down through here as well as the 50. Told you it broke through those. Jamie, remember, gaps, if they're always filled, doesn't necessarily mean they're going to be filled right away. It might be 3 days, 3 weeks, 3 months, or 3 years from now before that gap's filled. All you're looking for is what's happening in this trend currently, then don't even worry about the gap. Remember, a candlestick signal, especially a doji in the oversold area followed by a gap up, is your best friend. That's why you want to recognize what each individual signal is representing. So if you see a day of indecision, a doji, followed by a gap up, that tells you exactly what their decision was. This is YNDX, kind of a stutter step, and notice on the pullback, it was very indecisive. Now you've had a big move to the upside. I wouldn't be afraid to be buying this one with the anticipation that your first target is a 50, with this downtrending channel kind of corresponding. And then once it gets to the 50, then you see whether they can break through or not. What do you mean by wave 1, wave 2? Usually prices move in waves, Val. There's the Elliott wave theory, or not the Elliott wave theory, the Elliott wave analysis, which he basically kind of pointed out that prices do move in waves. We're not interested in trying to calculate what the waves are telling us. We're trying to tell us or calculate what the signal pattern is telling us. Darn fly. And then see what wave count would be. If this is wave 1, usually wave 3 is going to be equivalent to wave 1. So that's just telling you when it's time to buy, and then the wave count usually tells you what the magnitude of that move should be. No, if I'm trading, all depending on how fast I'm trading. If, for example, I'm a swing trader and the market is in an uptrend, and the next morning it opens down, the market's move, or the Dow opens down 50 points, and the Nasdaq's off 12 points, and the stock that I'm buying has pulled back a little bit, but not anything fantastic. If I was buying that based upon my buy signal off a daily chart, and I'm looking to buy that day, now I'll swing down to my 10-minute chart and see, all right, is the 10-minute chart on the Dow starting to bottom out and heading back up in the uptrend that was already anticipated in the charts? And is the stock that opened a little bit lower starting to move up with after some profit taking? And if that's the case, then I'll step in and start doing some, getting some background noises. Okay, I don't know what that is. Is everybody getting that? Huh. No, I don't know what, it just started. I don't know what that is. A little loud on the volume. How's that? Any better? Maybe it's me breathing into the mic. Is that better? All right. All right, I'll try that. I don't think so. Anybody else has an open mic. The only thing in the background is I got John Philip Sousa on my Pandora on TV, but that's about it. Okay, where am I? VTAE. Notice when they moved this up big, there was the profit taking. Then the next day told us the profit taking was over. This one you can still buy. If it's already moved 7 points, it has a good possibility of going to the $21 range. Now, a lot of people say, well, I don't want to buy a stock that's up that much. You got to remember, that stock's up that much for a reason. Something happened that changed investor sentiment. All we're doing is graphically looking at when the buying and selling is going on in that investor sentiment. And what do we expect coming out of a big move like that? Usually more upside. We're just waiting to see when the upside profit taking or the profit taking of that move is over and continuing the uptrend. VNR, after the pullback, now they're just back up above the T-line. So if they opened up positive, what would it be telling us? Number one, they'd be confirming the doji. And number two, they'd be breaking this downward trend channel, which is pretty consistent with the whole downtrend. But if they open this positive, our first target would be up here at the 50. And then if they could get through there, that tells us we're in a good, strong uptrend. But again, buying on this one on the basis of what do we expect after a doji, especially a doji that just closed up above the T-line. So if we can anticipate what a chart is telling us, for example, we can see the wedge on this chart. So if they were, and we have a little inverted hammer. Let's make this bigger. This is ITEK, ITEK. Got a doji, little inverted hammer. If they open this positive, what do we know about an inverted hammer? But usually on a positive open, that's the direction they're going to start moving. So if they started moving this positive and broke out through this level, it means there could be another nice strong run to this one because of breaking out of that wedge formation. SGYP. Slow curve. You could be buying this one. Just watch what it does once it gets to the 50, also kind of corresponding with the downtrend. But at least we know if we put on a positive, opens positive, and our first resistance right here, that if we see it's resisting, we're at least going to come out with a little bit of a profit. Even though the trade didn't work, we came out, as I say, with a little bit of a profit. We move on to the next one. The casinos seem to be working. Notice on Isle Capri, little left-right combo right here on the T-line, which means if there's more upside and they can break out through this level, wave 1, kind of wave 2, going into wave 3, should have another 5 points to the upside, which also makes Caesars. Notice the T-line crunch in progress. If I was going to buy this, I'd put a buy stop at $10 because if it came up through the 200, that's telling me they've broken out. There's still going to be a lot more upside. And Potbelly restaurants, notice how it's supported right here on the T-line. If it opens positive, we know at least the first pop's going to be up to the 50-day moving average. Once again, I like to buy the ones where we know the move is in the right direction. We know where our target is for the first resistance. So even if it failed here, we'd still have approximately a 10% return on that trade. And if it went through, where's our next target? The 200, and filling this gap over here. All right, on the short side, the things that we're looking for are things like our best friend to the bearish side, a doji gap down, like we saw in VGR today, which means get ready to short this on weakness tomorrow because wave 1, wave 2, wave 3, notice that this is a blue ice failure. They popped it back up, not on a reversal signal, just on a pop-up. And where did it fail? Right smack dab at the 50-day moving average. Bearish Harami, hanging man, bearish confirmation. Where was the next target? The 200-day moving average. Or the lows, which they hit both, went through the 200, hit the lows. Except now what do we have? We still have that doji gap down. If it opens lower, figure wave 1 and wave 3 are going to be. We put a recommendation on shorting SLCA today based upon this slow curve and kind of a kicker type signal where notice on Friday Thursday they opened it here, closed it here. The next day they gapped it down. So we shorted this one today. Didn't show a lot of strength to the short side, but also what type of pattern was it doing? Wave 1, wave 2, going into wave 3. They could bring it all the way down into this area at the same magnitude of this move. Recommended a short a couple of days ago on UNT. Because if you observe the obvious, which way is this trend? Obviously down. Couldn't ever get above the T-line. Finally got back up above the T-line, and they brought it right back down again with a hanging man left-right combo. You just stay short. Where's the projected trajectory of this trend? Let me see if I can make this big enough. Well, here's the trend. It should come down into this area at some point. We shorted OAS. Notice the failure right here at the 50 with a little bearish Harami hanging man. Next day, this is a very good sign. When they take it up and then fail and come back down through the open, you can start shorting after that signal, because that tells you they weren't taking it up anymore. They were still selling it off. The expectation of what this signal told us, we're staying short until we see a buy signal. Now, if you look at the bigger chart, you essentially have wave 1, wave 2, wave 3 could be the same magnitude to the downside as wave 1. DreamWorks, there's your dark cloud, there's your gap down, there's wave 1, wave 2, going into wave 3. That you might see recommended as a short for tomorrow. And GMLP, right smack dab at the 50, you had a left-right combo. What's that telling us about the trend? It's probably coming right back down into the trend. So seeing this right here pretty much gives you an indication of what they're doing with the trend. They couldn't get it up through the 50. They're coming back down into the trend. All right, and a couple more. We recommended PAA. Same scenario. There's your doji sandwich. Notice a bunch of dojis right here, kind of telling you that this downtrend is still in progress. We are still short QIHU. Could never get above the T-line. Wave 1, wave 2. Notice your doji gap down into wave 3. We re-shorted BABA today because it opened, look where it opened today, below the previous day's open. And which direction was your trend? Your trend was already down. So when they got back up to the 50, they told you they weren't going any further. They knocked it down. So this makes even for a good short tomorrow. If it opens lower tomorrow, what type of pattern are you going to have? More than likely, you're going to have a bearish flutter kicker signal telling you there's still a lot of force to the downside. Oh, I can't remember. Let's see. I can pull it up here. BABA. BABA, I shorted, or I bought the October 6250 puts today. On BABA is the 50. Here's the 50. This is the T-line. Couple more that you want to look at for shorts. DDC. Notice how it failed right at the 50. Kind of a doji sandwich taking you down. Where's the likely target? Down to the bottom of this kind of trajectory. WABA. WABA will probably be an option trade that I put out in the option room tomorrow. Notice your doji sandwich, wave 1, wave 2, and notice where wave 3 is. Just about ready to break down into a lower level. So if this has already moved down 25 points, this could take you down into the $20 area. And I think that's about it. Let me see. SEDG. Left-right combo right on the 50. Which means if they open this lower tomorrow, confirming the left-right combo and the failure of the 50, more than likely they're taking it back down to test the lows. TMST. That's what we're looking for on the slow curve. It's that big breakdown. Notice they took this all the way down to the bottom of this kind of channel. I'd still stay short on something like this. Anytime you see that big move to the downside, like we saw in Men's Warehouse, there's a kicker signal. You just want to stay short on this one. Okay. For shorting stocks, we need to check with our broker to find out which ones they will let us short. Yes, and the reason is most of the time that's what, when you sign that margin agreement, that is a piece of paper that's also saying that if you have stock in the account, that they can come and borrow it to lend to somebody else that has shorted, and when that stock's covered, it'll be put back in your account. So they can always move those stocks around. But if you're trying to short a stock that may only trade 220,000 shares a day, and it's a $40 stock, that might be light enough where they don't have any of that stock in any of their accounts. They're going to come back and say they can't short it because they don't have it. Well, theoretically, all these brokerage firms have cross agreements where they can exchange stock back and forth to each other. The only problem is that's a lot of headache for them. They'd rather just say they can't do it. If you're really forceful, you say, go see if you can find someplace else. I'd like to short this. But it's usually not worth the hassle. So there's another whole criteria that if you find something that you'd like to short and they don't have it, and buying the puts may not make any sense. Remember, you're not trying to, part of the whole premise of making money is having the ability to get into positions. And if you can't get into the position to make money, just move on to the next one. That's the benefit of candlestick scanning, is that if something can't be executed, you should have another 2, 3, 4 other opportunities to go after. Okay, so right now with this market condition, we're either watching for a pop to the upside or a pop to the downside. I would be a little bit more suspicious that we don't see another pop to the downside, because that was what our fry pan or dumpling top was telling us all summer, that this big rollover was looking for a big breakdown. We've had a pop back up, and where was that pop back up to? Right to the T-line, and they're having a hard time getting through the T-line. So I wouldn't be surprised we wake up, if they break this downtrending channel, that wave 1, wave 2, wave 3 of the bearish J-hook pattern is in progress. Okay, so with that, are there any general questions on candlesticks? Let's see, if you are in a sorted position like 5, is there a way to predict that we've reached close to the end, a reversal is coming? It's on a support level from July FIBE. Well, the only thing I can tell you is, notice how you had wave 1, wave 2, now you're in wave 3. And if wave 3 and wave 1 look equivalent, so far you're in the oversold area and you're not seeing any buying yet, so you just stay short. But you have to say to yourself, and this is where the stop loss analysis becomes fairly easy when you're using the candlestick analysis, where would be a spot that would tell us that the bulls have definitely taken control and are probably at least bouncing it to the T-line? If I was short this, I'd have my stop tomorrow at today's open, because if you're in the oversold area, you're that far away from the T-line, and they were able to bring it back up to that level, that tells me the bulls are starting to take control. That's where I want to stop out and take my profits. If it does bounce back up to the T-line over the next couple of days, worst case scenarios, you see if they fail and doing a bearish J-hook, you can always re-short it. So just pick out a logical spot that tells you if this isn't a downtrend, where should it not be trading? And at this point, it shouldn't be trading up above that level. Okay, with that, Jim, go ahead and do the double line. All right, let's see. I hate to be a pest. Nobody's a pest in here. But could you discuss a little more in-depth setting the initial protective stop when we enter positions in the morning or during the day? Yes. If you were entering a position, I'm trying to think of one. Let's say, for example, we'll take soda. If we saw there was a doji gap up yesterday or on Friday, today it opened positive and you started buying, if this was confirming this, or the signals were being confirmed that the bulls were in control, where should it not trade at all intraday? Well, I usually set my stop at the previous day's open, because if this is supposed to move positive from here, they definitely should not be able to trade it back below this level during the day. If they open it here and near the close, they're closing it more than halfway down this candle, that's telling, this was the candle that told me the bulls were in control. If they were able to close it more than halfway down the candle that told me the bulls were in control, that tells me the bears are still in control. So on my initial setting of a stop, if it opens here and closes below the halfway point, I close it out. If it trades back below the previous day's open during the day, I close it out, because that's not the direction it should be going. Now, I suspect it should be in an uptrend. So if I close it out here and the next day I saw it open positive and start trading positive, this is still in effect over here. I can always buy right back as long as I see that they didn't close it below the T line. Okay, did that answer your question, Alex? SH or ASHR, Harvest, China. Right now you can be short this one with it trading back below the T line. Yeah, kind of a bearish kicker signal. Guild, you stay long on this one as long as it stays above the T line. Today was just some backing and filling, and those were consolidated to right back to the 3T line. So if they can't even get below the 3T line, that means you're still in a fairly strong uptrend. ABC, very simple. They're going to move this one in the direction of how they open it tomorrow. So if they opened it lower, you can kind of anticipate the bobble, which means they're going to come back and test the T line. So you take your profits. On the other hand, if they open it positive and get through the 50, doing a doji sandwich, breaking out through this level, you want to stay long until you see a sell signal after that. Teva, doji, right on the T line. Very simple. It's going to move in the direction of how they open it tomorrow. So if they open up positive, instantly telling us they're not trading below the T line. Whoops, what did I just do there? CRAR. Cara, what the heck? Cara, as long as it stays above the T line right now, you stay with it. That's just a very simple analysis based upon the fry pan bottom. There's your doji sandwich and INCR, which means there's going to be more upside, which means they're probably going to fill the gap at least and then see if it moves positive from there. AST. Notice how it's supported right smack dab off the 50 and the T line. First target is the 200-day moving average. WPCS, wee little stock. Make sure your volume is good. It whips around quite a bit. If you're buying this one tomorrow, use the T-line /50 as your stop. You shouldn't trade back below that level. NYMX, stay long on this one. Just be conscious of what it does at this level. It's either going to break out. If it fails, you close it out. You can always buy it back later if it comes back up through that level. EVHR. How come VHR? That one's not coming up. That's because I didn't do it right. EVHC. How about that one? Morningstar type signal. This one you can be buying using the T-line as your stop. Vonage has a good looking chart. I was looking at this one earlier. You can buy this one on positive trading tomorrow. Let's see, the dollar has been backing off. If I was going to short the dollar tomorrow, I'd put a sell stop right here. If it's opened up after hours a little bit higher. But if it starts coming back down through that level, that tells you this failure up here, right smack dab off the 50, should be taking it at least back down to test the lows. ZIOP, looks like it got through the 50. If this one opened lower and started trading down, I'd use today's open as my stop. Anytime I get to the overbought condition, I start using the previous day's low as a stop, because if it came down through there, it tells me the sellers are in control, and it did it right at the 50-day moving average, tells me I'm in the bobble. Netflix, all you can do with this one is stay short, as long as it can't get back up above the T-line. ACAD, there's the T-line crunch in progress. I wouldn't be afraid to be buying this one on positive trading tomorrow, telling me they've broken out through the 50 on kind of this J-hook type pattern. KERX, nothing here. It's below $5. I wouldn't, if you're short, use the T-line. If it comes back up through the T-line, that's where you want to be a buyer, especially after seeing 4 or 5 dojis in a row. Anytime you see those series of dojis, start getting ready for a new move. IPHI, all you can do with this one is stay long as it stays above the T-line. And PBYI, nice big fry pan bottom, also with the potential of opening positive, doing a doji sandwich breakout, will give you a lot of running room. That one you probably want to, option traders, you want to probably keep an eye on that one. Valero, oils are getting hit a little bit today because oil is trading off. And I don't know where crude oil is right now. But it's up 46 cents after hours. So Valero, if this opens lower, they're taking it back down to the 200. Alcoa, that's a failure. That one you can definitely be going short on weakness tomorrow. There's your kind of bearish engulfing signal failure at the 50. AMGN, another one that you can get ready to short. Notice you've had a bearish engulfing signal, followed a few days later by another bearish engulfing signal. That's telling you that the bears are starting to take control of this one. AXON, nice fry pan bottom, broke out through the 50 today. You can be buying this one on positive trading. And Moss, stay short. Notice the kicker signal failure at the 50. Never was able to get back up above the T-line. Look for wave 1, wave 2, wave 3. FCX, you stay long as it stays above the T-line. FCX, stay long as it stays above the T-line. CELG, I probably wouldn't be long or short this one right now. Just no direction to it. Oh, those are shorts. Did I do those right? You're asking about going short on these? No, these are still in uptrends. And FXY, the Japanese yen trust, the Dow heading down, the yen, if it breaks this little downtrending channel, and another wave to the upside. Kroger beat their earnings the other day. This one you get ready to buy. If this was a true price move today, I'd be ready to buy this one on positive trading tomorrow. It's not a very exciting mover, but Kroger's been a pretty steady Eddie here for a while. ADPT, another one you can be buying as long as it stays above the T line. BOFI, just stay long. There was your doji bullish confirmation. You just stay long as it stays above the T line. And DICOM, another one you just stay long. TBT, the short the bonds, which means the bonds are these are ultra short. You stay short on this one. As long as they can't get back up above the T line. And CLI, get ready to buy this one. This one's going to move in the direction of how they open it. If it opens positive, telling you that the 50 is not acting as a resistance, you want to be a buyer. Hasbro, same scenario. A little slow curve, closing right on the 50. Be ready to buy this one on positive trading, and then use the 50 as your stop until the T line catches up. Paycom, another little slow curve. You can buy this one on positive trading. Whiting showed a little bit of energy today. Not a lot. Still waiting for buying this on a longer term basis. Once they get above the T line and definitely above the 50-day moving average. Wouldn't be doing anything with it just yet. And Apache, nothing here. It's setting up, looking like a double bottom, but I wouldn't be buying just yet until we see bullish confirmation. And CBRL, after the big long-legged hammer signal, you stay long on this until you see a sell signal. The FAS, in that wedge formation, I wouldn't be long or short this one right now. The VIX, at best, you should be short, seeing if the 200-day moving average is going to be your target. Diamond Resorts, that's a good-looking chart. You can buy this one on positive trading after the little hammer gap up through this downtrending T-line. Oil Fund, still back below the T-line. Another one that you can be shorting if it opens weaker tomorrow. Okay. All right. This is what you want to watch out for. If we see strong pre-market futures tomorrow, they're breaking it out this way. Bearish pre-market futures, they're breaking it down. Be ready to short. All right, everybody, have a good evening. We will see you bright and early in the chat rooms.